Congratulations, everyone. We did it. We've finally broken through that glass ceiling of $30 trillion in debt. The United States government is $30 trillion in debt. That is, I don't know how much per person, but it's a lot. The national debt will never be paid off. That hasn't been a possibility since the late 1990s. That was the last time that anybody ever talked about paying off the national debt. Maybe some Tea Party guys talked about it in 2010, but pretty much ever since then, people recognize it's not going away. The national debt will be with us until the United States goes bankrupt and ceases to exist. Now, the wizards of smart and finance tell us that this is no problem, that the United States is so powerful and so wonderful that it can continue to go deeper and deeper into debt, and it will continue to roll the debt over again and again, year after year, because we're the cleanest dirty shirt in the hamper, because the United States is still seen as the least risky investment on the planet. And for that reason, interest rates, treasury yields will remain low forever. And therefore, we can continue to go deeper and deeper into debt. We can just borrow more money to pay the interest on our existing debt. That's how bulletproof, we're told, the financial situation of the United States government is. And as of right now, that looks to be the case. We are at $30 trillion in debt. You would think that anyone, when you realize, hey, the federal government can't pay that all back, you would think that maybe people would be more hesitant to invest in U.S. government debt, yet it is more valuable than ever. Treasury yields are lower than ever. People are willing to accept negative interest rates on U.S. government debt. They're willing to loan money to the federal government at a loss. And this trickles down to the rest of our society in the United States. Interest rates are chronically low. They're negative. It disincentivizes people from ever saving their money. The incentives, when you have high inflation and low interest rates, when you have negative real interest rates, that's what that means. When inflation is higher than the rate of interest, it means that you lose money if you save it. And so therefore, the financially prudent thing to do is to spend your entire paycheck the day that you get it. And that leads to high time preference behavior. It leads to, a society of people who just consume and consume and buy more products and will spend their money on anything just to get rid of it. This means people will not prepare for the future. They don't try and save for a rainy day because they can't, because their money will be worthless by the time that rainy day comes around. They become much more financially unstable. If they one cancer diagnosis can put them in the poorhouse. And in addition to being disincentivized from saving, as being penalized for saving, Americans are heavily incentivized to take on debt, to go into debt themselves. We have a whole generation of young people who have tens of thousands, if not hundreds of thousands of dollars in student loan debt. That debt, it's not buying them a career. A 4-year college degree, that's not going to make you that much more employable. It was a scam the whole time. I mean, the correlation between, a 4-year bachelor's degree and tremendous financial success in the marketplace going back a few decades ago, those statistics were an example of, correlation versus causation. It used to be that only, real rich kids who had pretty great prospects ended up going to college. And so these rich kids, yeah, they went to college, but the real reason why they were so successful is because they had connections to begin with. They had a big family business that they could go back to and manage. They had connections to where they could get, a high-paying job. If everyone starts going to college, all of a sudden the college degree, it's not, the people who are getting it aren't so special. And so, what do you believe, or, what do you want to bet? Sure, you say 40 years ago, everyone who went to college was in the top 1% of income earners. Well, if 50% of the population goes to college, just mathematically, they can't all be in the top 1%. And so all these kids go into debt because the debt's so cheap, and they're told, oh, you can afford it, you'll pay it off later. With the idea that they're going to be in the top 1% of income earners. And so this is just one example of the way in which debt has degraded and rotted away at our society. Of course, low mortgage rates, as I've talked about ad nauseum, have bid up housing prices. It has made housing completely unaffordable. Because mortgages are so cheap and people can afford bigger houses, all the builders build bigger houses, and then all of a sudden there's no bottom, of the real estate market. You start, a shithole is $350,000. And that's because people are just looking at, okay, well, what do I make every month? Okay, how big of a mortgage payment can I afford? And then they take that, simple calculation, and they will buy a house no matter what the price is, as long as they can make that payment. And as interest rates get lower and lower, the principal on their mortgage can get bigger and bigger. And their house is not getting nicer and nicer. These people are not moving into nicer and nicer houses. The price of housing just goes up. That's all. And then you've got everyone with a 30-year mortgage that they know they're never going to pay off. Because at some point, when housing prices come down, they're going to be underwater because they so overpaid for their house, and they're going to let it go back to the bank. And then they're going to have to go back to renting for, I think it's like 7 years. I think it's about 7 years that it takes you after a foreclosure to be able to get a mortgage again. And then, of course, you have private industry, which invests in all sorts of ridiculous, unprofitable projects. They throw money at literally anything because the debt is so cheap. They can issue bonds and even buy back their own stock, which will never make them any money. It'll just make their stock price go up in the short term, for one day. And so debt is so cheap, private companies, well, they're just bidding up the price of everything, bidding up the price of private jets, bidding up the price of raw materials. They're building all sorts of things all across the country that really serves no purpose. And so a country with interest rates that are so absurdly low as ours, where there's no growth, really, there's no growth prospects, there's no reason to save for the future, there's nothing to invest in the present, you run around with your head cut off collectively. And so for a long time, the clear answer to me has been interest rates need to rise. Now, I used to think that was as simple as, oh, well, the Fed just needs to raise interest rates. And so if you had, somehow you got some crazy guy like me that was leader of the Fed that was willing to raise interest rates, well, then everything could be okay. But, as I spend more time and listen to other voices, I'm not 100% convinced that the Fed really holds us, is able to completely control interest rates. I'm not so sure. If the Fed raised Fed funds to 20%, like they did in 1980, would that really make long-term interest rates go up? Or would we just see an inversion of the yield curve, in perpetuity? I don't know. I mean, to the extent that interest rates are a function of growth prospects, I don't know how we would get those higher. But at this point, if the goal is for interest rates to go up, is to encourage savings, is to induce investors to invest their money more rationally, and to actually select from different projects and choose to fund things that actually make sense and will accomplish something in the world, and not just keep dumping money into fly-by-night scams like Peloton, then I don't see how raising the Fed funds rate could hurt. I would like to test the theory that the Fed cannot influence long-term interest rates. Why doesn't the Fed just raise Fed funds to 10%? I want to see it happen. We all know that the Fed can't raise interest rates even 1%, 100 basis points, without crashing the stock market. But what happens to the rest of the economy? What happens to credit markets? Do interest rates really rise? And if they do, that's a good thing. Sure, it'd be bad in a certain way in that it would collapse the current system. The housing bubble would burst. Of course, the stock market, we all know, would go down. And the federal government would go bankrupt. It'd be gone. We would have to start over from scratch. If, let's say, Treasury yields rose to 5%, there'd be nothing. The federal government would have no spending power. They would just be buried in interest. And they can't issue more bonds in order to pay that interest because those bonds would be issued at a higher interest rate, whatever that is. And so once we get to that point, if interest rates ever were to rise for the federal government, it'd be over. And either the states would have to get together, form a new union or something, start over, or split apart. My preferred resolution, I certainly think, as things stand now, if there was a real crisis and the federal government collapsed, you would not see all 50 states come back together and reform the same government. They would not form a government together. There was too much division amongst the states, and I think that both, if not, multiple parties, whatever, and by parties, I mean like groups of states, not political parties, I think they'd all be better off splitting up. But in order for us to get to that position, you really need higher interest rates. It's not even a consideration until interest rates rise and the feds go under and the housing bubble has burst. So I guess where I find trouble having hope is, how do interest rates go up? How do we get that goal? Because to me, it's been clear for quite a few years, that's what needs to happen. Interest rates need to go to a normal level. There's always been a positive rate of interest for all of human history. And I think you can look at Europe over the past decade and probably concur that negative interest rates have not had a wonderful effect on society. It's not healthy. Nobody can grow. Nobody can get ahead. And so I guess you could say that me and the folks at Davos, maybe we have something in common, but we have very different ways of getting there. The Davos folks see negative interest rates, and as asset holders, they see that as a problem. Because these are people who have a lot of money already, and they want to earn a yield on their investments. And what they see is the only way that they can get a yield anymore is by owning rental properties or owning service businesses and extracting rents or monthly subscription payments from peasants. The global elite correctly no longer see buying bonds or lending money as any form of viable path to earning any yield. And so their solution is to enslave all of us and turn us all into peasants who have to consume their subscription services and buy their non-durable goods and use their rental cars or taxis or high-speed rail and live in apartments that we never own. Also, these asset holders can earn a measly 5% yield on their investments year after year. But ironically, if I got what I wanted and interest rates rose, these billionaires would be able to get their 5% yield. They wouldn't even need to enslave the planet. Now, I think largely for these folks, they enjoy enslaving humanity. And this is just it's a good excuse. But I think it would be much harder for them to get their agenda through if there really wasn't any financial need for them. If it wasn't in their best financial interest to enslave humanity, I think it would be much less I think they'd be much less of a threat. Markets and society in general work when human beings are incentivized to serve one another and to uh, earn the respect and earn the resources of other people. Ideally, when you see someone who is, absurdly rich, it should be a positive thing. It should be a sign that that person produces so much value and is so successful at what they do that people willingly give them all that money. Not that they used the police and government in order to extract that wealth from the rest of society and enrich themselves. Generally, if you meet a billionaire today, I think most people look at them less as entrepreneurs and more as bottom-feeding rent seekers. So, one last thought, I guess, to close this out, to try and sum things up. What does it mean to have negative interest rates on average? If negative interest rates prevail in any economy, what it means is that if you save your money, you're losing money. If you put away $100 this year, you'll have, let's say, $95 next year. I think that's about what you'd get if you bought a 30-year treasury. You'd be making about maybe 2% a year, and we have 7% inflation, and so that would come out to a negative 5% yield. And if that prevails, if that rate of interest prevails across the entire economy, it means that the economy is shrinking, that people are getting poorer, that less is being produced year after year. That's capital consumption. You invest your money and it shrinks. And that's on average. That's not just, oh, you made a bad investment. That's no, you made a normal investment. It means that society overall is getting poorer. People are getting poorer. And so negative interest rates, low interest rates in general, but negative interest rates in particular, are the greatest cancer to our society. A lot of the mental illness that we see, the gender ideology, I think is probably the most prominent one at this point, but, the race hoaxing, all of the, the social justice stuff, a lot of that are probably symptoms of the rot left by our low interest rate turned negative interest rate regime. Remember, this stuff all goes back to Occupy Wall Street, which was, a reaction to the pain felt by ordinary people in the wake of the last financial collapse, which was halted and averted for the rich. And so I think that if positive interest rates are ever going to return, if savings is ever going to be incentivized and rewarded, I think that those who were bailed out in 2008 are going to have to face their day of reckoning. There's no way to move past this point in our history without sacrificing Wall Street. It's too bad. It's not like somebody could just run on this politically. One, I don't even know how. I'm not entirely sure how you could get interest rates up. One, but two, even if I had a foolproof plan, it's not something that you can really explain to ordinary people, which is unfortunate. But the more I look at it, that's what all this comes back to: the Great Reset, social decay. It's all a result of low and negative interest rates. So, with that said, I'll continue thinking about this and trying to develop this thought. Most of what this channel is just me thinking out loud. And I appreciate those who like to come along for the ride. So with that said, I'll see you folks back here tomorrow.